Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to Friday's edition of Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick. Spencer Israel is in Chicago with having a day off in the Windy City. On today's show, we're going to talk about the rebound in the market yesterday, some crazy price action in Children's Place, talk about all-time highs, matching double bottoms in Verizon and AT&T, crude over $50, Jim Panos, Pans Mellencrot, some merger action going on with Vistra and Dynergy, and Dennis thinks the CL chart looks interesting.
Joel, are we broadcasting live here? Because I'm offline here, and if the chat can hear us, let us know, but I do not hear
We
the show.
tested it right before the show started.
The stream is offline. Yeah. Okay, we'll take a quick break if you're hearing us, but we're going to figure out this.
Okay. Hold on. Let me turn it off.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to Benzinga's Pre-Market Prep. I'm your co-host, Joel Elconin, along with Dennis Dick. Spencer Israel is taking the day off, and we got a lot to cover on today's show. On today's show, we will be looking at the rebound in the market from yesterday. Some wild action in Children's Place. We'll talk about keeping an eye on all-time highs. Also, some earnings report. Deere has a big beat, and we're going to talk about crude over $50. Looking at the S&Ps are trading up $5 this morning at 68.50. Climbed into the 70 handle yesterday, keeping an eye on 75 even. That was Thursday's high, and also 50% retracement of the move. Crude over $50, 50.26. Haven't been over 50 in a while, up 60 cents. In gold and silver, marginally in the green here. Dennis, you had a good trading day. What was that, on Wednesday? How things go on Thursday, and how things go last night?
No, everything's went fine here. It's just interesting. I came in this morning and actually, I was excited because I took some Caterpillar home long just in sympathy with Deere, and I knew the Caterpillar was probably going to be up. I didn't feel like playing the Deere directly, but I kind of had a feeling, I don't know why I had this inkling that Deere was going to beat, probably because Caterpillar beat last time. So I brought some cat home, so it's like, oh, right, Deere beat, so my cat's going to be up. I actually already sold my cat, and it is up $1.60 here, but then I'm looking at my P&L, and I was like, how am I down $300 in Foot Locker? And I'm looking at Foot Locker, and I'm like, I didn't even know I owned Foot Locker. And here is just, it goes to show you, I usually have quite a few trading positions, and sometimes you get an odd lot in there, and I don't even pay attention to the odd lots sometimes. And I ended up having 42 shares of Foot Locker that I didn't even notice. And I'm looking at it this morning, down $300. I was like, I'll bring it up. It's down 10%. How do you lose $300 on 42 shares? So goes to show you, don't pay attention to those odd lots, because if you own them in a retailer, they can still punish you.
I think the chat is going to encourage you to buy another 42 shares.
No, I already sold it. I know.
Make 84.
I just sold it this morning.
Yeah.
So I'm out, but you know what happened? I had it. Okay, so I had it a little bit after hours. It was getting bid up, and I had a position on in it, and then I got filled. I don't remember. Maybe at 6:30, maybe at 7 o'clock after hours. But I only got filled on part. I obviously got left with an odd lot. But then you get sidetracked. I'm trading. I'm doing other things. I just never paid attention to it again. I wanted to sell it before 8 o'clock, the 8 o'clock close last night, because I did not want to hold it through earnings. So I knew I had the position. I just forgot about it for the last hour and a half. And then I come in this morning, I was like, hit myself on the head. Oops, I forgot to sell that position in Foot Locker, in the last hour. And obviously, coming in here this morning, stock is down significantly, down 9% on disappointing results. So goes to show you, pay attention to those odd lots. They can still hit you too.
Yeah, Foot Locker here, a little bit of a miss, 136 versus 138. Just a little bit shy on the revenues. Another retailer gets hit hard. I'll just give you your pre-market low of 63 even. We haven't been in the 60 handle in quite some time here. Haven't been under $60 since August of last year. I still be keen on that pre-market low, and below that, below 63, throw bids out 62 and a half, 62, 61 and a half. See how low they're going to take it. But right now, 65 has been the rebound high, and another tough quarter for a retailer.
Yeah, the retailers have just been in tough, like even when they report good earnings here. Look at Children's Place. Like we talked about Target. Target had a good report, bounces and gives it all back basically in one day. The Children's Place, you were bringing this up to me, Joel. This was a good report for PLCE. It goes up, almost touches the all-time high, and then just leaks all day. Actually, in the morning, it opened up right near the highs around 125. Within about 20 minutes, the stock was already at 115. Gave back $10, and then it leaked the rest of it the rest of the day. It gives it all back. These retailers, people just don't want to own the box stores.
And hit 126.75. That was in the pre-market trading. And then I was looking at this one. I didn't pull it up until a little bit later in the day. And I looked, and the former all-time high was at 122.95. Nope, it was a little bit higher than that. The former all-time high from just a day or two ago was 125.30, right? So this thing opens up at 124.80. Dennis, it goes up another dime, just a dime. Probably a big seller at the point, 124.90, and then Kaplui went all the way down, and then came within a quarter of Wednesday's low at 110.10, and didn't rebound much off that. So potential double bottom there. Just pay it. When stocks act like that in the pre-market or after hours, you just got to pay attention to those levels, especially.
They're significant.
Yeah, and look what it did. All the last couple days, this thing, they even hit it going into the report, right? This thing 125 to 110, you're back up at 124, 125. Come on, you got.
Sellers probably up there.
Yep.
Yeah, and it's a retail stock. Even on the retailers have just had it rough. Yesterday they've been holding up okay in the sellout that we had, 2 days ago there, but they've just been killed across the board. Unless you're Amazon, every retail stock has pretty much been beat up here. And Children's Place is one that had been held on quite well. And obviously we talked on the show, it actually hit an all-time high in the pre-market there yesterday, but people just ring the registers on these things, and all of a sudden it bounces back, big bounce back, get all those losses back from the last 3 days. People were there to buck them. And it's another point you're making there too. Open 10 cents off the high there, Joel. How many times do we talk about this? How significant the opening print is. And this is, how I've made money. My 18 years of professional trading at Bright Trading. I've specialized in trading the open. That's where I've made probably over half of my money over my 18-year career, is right on that opening print. And it's something you taught me on like the second day in 1999 when I started in your office in Detroit. You were saying a lot of times a stock will open at or near its high or low of the day. So if you can be on the right side of that trade, often it's a no heat trade. And a lot of times you'll see an earnings report and you'll see the stock boom, open, and then start going one direction or the other. So if you can get that direction right, if you can hold on just a little bit, you can have the opportunity to make a lot of money on those opening trades. And that's, what I try to do. I strategically place opening only orders, OPG orders on a lot of different stocks, trying to get, the right ones. And what do I do? When I get filled on 15, 20 stocks, OPG, I start managing out of the losers, because my whole strategy is to try to maybe get the stock at the high or the low of the day. If it starts going against me, obviously I'm wrong. So if you can work out of those losers, hold on to the winners, sometimes you can actually, it just works itself out. So if you can cut the losers fast, you might be in a couple other positions at or high or the low of the day, which is going to be moving your way.
Yeah, and a lot of volume, a lot of program traders are using those opening and also those closing prices. Let's get to a little news here. Mallinckrodt, and we haven't heard from the Brentster in a while. Brentster, how you doing over there? What's Jim Chanos saying about Mallinckrodt?
Hey, doing good today. So yesterday, the SALT conference was happening. It is, I believe, out in California, and Jim Chanos Canacos was one of the presenters. He said he's short both Mallinckrodt MNK and Express Scripts. That's ESRX. The main reason, he had a few good reasons, but main reason was he really doesn't like how the two companies work together. He said that the sort of alliance between both companies possibly could hurt investors.
And he called
What?
Actar like the most overpriced drug ever.
Pretty much, yeah, basically. And I mean, you can look at the chart. You see, Mallinckrodt really sort of had a blip only on that. However, Express Scripts did fall and continue lower and closed just off of the session lows.
Brent, wasn't
Yes,
Citron dogging MNK too?
absolutely.
Mallinckrodt a while ago. Are they still
Yep.
short? Do we know if Citron still? Did Left cover that?
I believe he is still short. Yeah, I
Because
believe
he
he
was the
is.
one that kind of started, and I remember, and the stock was quite a bit higher.
Hmm.
Andrew Left at Citron does great research too, and I
Yep.
mean, you can say, oh yeah, he talks his book, and and yeah, maybe he benefits from being able to do that, from being as influential as he is,
Hmm.
but you got to give Citron props too. I mean, they were on this a long time ago, and they've been making some money on this. I think this was in like the 70s or the high 60s when Citron was taking their short position there. Now I'm looking at the stock at $40. Andrew Luff's pretty happy on this one.
Yeah, and we did get some responses from both Express Scripts and Mallinckrodt directly. It's pretty much what you'd expect. Express Scripts said we're remain confident in our business model, etc. The Mallinckrodt responses were a little bit more interesting. The Mallinckrodt spokesperson that one of the reporters on the News S spoke with was pretty much directly refuting a lot of the stuff that Chanos was saying. He was saying that like you were saying, Joel, that he really doesn't like how Actar works, and the Mallinckrodt spokesperson that we talked to said that although Actar is a significant contributor to the company's overall profitability, it is substantially less than the asserted estimates that Chanos gave. So he directly commented on some of the numbers that Chanos was giving. He was also highlighting that Mallinckrodt's candidate right now, it's called MNK1411. The spokesperson was highlighting that this is not a generic competitor to Acthar, and they are actually two very different drugs. So again, going directly against what Jim Chanos was saying yesterday at SALT.
All right.
Joel, talk to technicals here on MNK, because this stock
Uh,
has been just murdered. I mean, we go out to the monthlies. In 2015, this stock was a $134 stock. Now you're talking about a stock of 40, so it's down over 70% here from the all-time high. It's an ugly looking chart. It got hit hard the last 3 days. Hit again, obviously, on the Chanos news here. What are your technical thoughts here on MNK?
All right. Well, I'm going even here to the monthlies, and I'm finding some problems here. So, uh,
Any problem, you think?
yeah, I'm going
Is
to.
this actually approaching like all-time lows?
Let's see here. Well, no. Well, let me see
Eh,
here. Let me go to the monthlies. Okay.
Get
Yeah, it
close.
is. It is an all-time low here. Yeah.
Wow,
I.
all-time lows. Okay, this is the exact so and we've been in a relentless bull market here, so we've seen lots of stocks hitting all-time highs. We don't see a lot of stocks hitting all-time lows, and here's one, that's hitting an all-time low on one of the best bull markets that we've seen in the last 30 years. So obviously people just not liking this issue.
No, it's getting valiant, right? This one in the same
And
arena.
so,
There's only
yeah.
one number I can give you, and that's 39.60. If you're looking to cover short or bring it in, a whole number like 40, 39.60 was yesterday's low. You don't even want to think about going long until this gets green and stays green. The close yesterday's at 40.87. So really, those only are the two levels that I could give you for this stock that's really gotten hit, Mallinckrodt. Dennis, before we get to the earnings, a little merger or potential merger going on here. Vistra Energy makes takeover approach to rival power producer Dynergy, and this is being reported by the Wall Street Journal. Dynergy has a lot of debt here, Dennis. Any comments on this potential merger?
Um, this is the stock that has been murdered here as well. So, and this is this just a rumor? Or is this an actual? Where is this coming from? Is this an actual announcement from the companies, or is this
Uh,
still just a rumor?
it's just a rumor at this point. Has made an
Okay, it's just still
approach.
just a rumor.
Yep,
And
yep.
who's the acquirer?
Vistra Energy, and
Is that a
that
public company?
yes, VST. I'll bring up the
I
chart.
don't follow this company at all.
I've never
Vistra
heard of
Energy,
it.
VST. This is one. Oh, it just came public.
Okay.
This one, I got two. I've got about 7 trading days on this VST. They're
Huh.
only another 7 days. They're already buying other companies.
Yeah, I don't know
They don't
about.
play games.
All right. So the more relevant chart here is Vistra. I don't see a lot of movement though,
Seven
but
days. Oh, 7 days of action. Yeah. So Dynergy's getting a huge pop on this.
yep.
DYN. We're up 19% here. I don't know if this is more than a rumor or not, but just looking at it here, stock up 20%. Obviously, everybody's jumping on board. We've been talking about rumors for a long time, and I didn't read the headline, so I can't comment whether there's more to it than that. But when stocks pop on rumors 20%, I like to ring the register because sometimes these rumors don't materialize. Now, a deal comes around. Did they say a potential
No,
price
I'm
in
not
the
finding.
rumor?
I'm not finding a potential price on this
Oh,
one, and it's already starting to leak. We hit 940, and now we've come down to the 850 level. So once again, you want to see it back up at 940 in the double digits, or else we could have a slow leak in this one. Long way to go to fill the top of yesterday's range. That's 736, and I guess we'll do one more here that we talked about at the top of the show. You said the Colgate Palmolive charts looking interesting to you. Didn't quite get to your level that you were looking.
no, I talked about it on the show yesterday. I was like, I like it in the 72s. I just said come to pop on the yesterday on the show. It didn't quite get there. Got to 73.02. I wanted another dollar down. I wanted to get it, on the cheap, fill the gap. I was gonna, buy in the low 72s. Couldn't quite get there, and then it popped back, and it's popping back a little bit after hours last night too. I still like it down at 72. I'd love it to fill the gap, get another shot at it. It popped 2 days ago on rumors that somebody might buy it, and the company's coming out saying they're not selling themselves. But where there's smoke, sometimes there's fire. And if you can get it from where it came from, I always like that setup. I've made a lot of money over the years, buying stocks. They get a rumor, they pop, and then the rumor gets forgotten about, and it just back down to where it came from, the original spot before the rumor broke. And sometimes, you can buy it at that point. And sometimes rumors will start again. And in the best case scenario, sometimes the stock will actually get taken over. Remember, I had Lorillard that way, where I bought it back from where it came from. And then the deal did go through. I think it was Reynolds American that ended up buying Lorillard. And I had the payday off of it. So I love it when they come back from where they came from. So I'd like Colgate at 72. I don't like paying up the $2 for a conservative defensive stock like CO.
All right, then let's start with the earnings parade from last night.
Yeah, let's go to Deere here. We'll get the earnings just for first. Congratulations to John Dodson. He said in the chat he bought a couple thousand shares ahead of the report, so he's sitting pretty here this morning as the stock is trading up 8 points. Joel, give us the numbers here for DE.
Big beat, buck 89 versus a buck 64 estimate. Good on a little shy on the revenues though. They don't seem to be paying much attention to that. 726 versus 731. So nice pop up to 123.05. I know that's a new all-time high. The only thing I'd say, your whole number 123. I'd keep an eye on that. We've already leaked $2.50. So. No lunch beds today, Dennis, but the high of the day could be in John Deere.
Just looking here, obviously I said off the top of the show, I brought some cat home. I just had an inkling too that deer was going to beat because cat beat the last time too. And I didn't have the guts to take the deer home long, so I took some cat home long. And obviously that's getting a sympathy move up. It's up $1.50 here, but it's a nice pop for deer. I mean, okay, so just jumping up here to the monthlies. This is an all-time high for deer again,
Oh, blow
isn't
it
it?
away. Yeah, John Dotson.
Wow.
Yeah, John Dotson. He was anticipating it yesterday, and he made a good call. I think it's not only an all-time high here, Dennis. I think we are just obliterating the all-time high.
Yeah,
Former
we are.
all-time high, 116.95. I'm not a buyer until it comes down into that area. I mean, the gap from yesterday is absolutely ridiculous. Oh no, I'm sorry. I just gave you the all-time high in cat instead of deer. Let me give you the all-time
I
high.
think deer was just his all-time high yesterday,
Yeah.
114.96.
Yep. So you got a long ways to go to fill the gap.
Yeah. This is a stock that everybody, again, like I said, I'm a momentum trader and a contrarian investor. And I will tell you at the beginning of 2016, when, they were throwing out a lot of different things, oil was going under, $30. And, we were talking, oh, no, all these oil companies, and they're not going to buy any equipment from Caterpillar or Deere. And everybody was throwing these stocks out. And Caterpillar at that time got down to, I'm just going out to the weeklies to look at it. It got down to under $60, got down to 56. And everybody on CNBC's dogging the stock, saying, oh, Caterpillar's in trouble here. They got, some debt, nobody's buying new equipment. Well, look at it, a year and a half later, and now everybody loves it up here at 101, 102. Same story with Deere. Everybody hated it at 70. They all love it at 120 here this morning. From an investing standpoint, I feel like they're all doing it backwards. That's why I've always been a contrarian investor, but a momentum trader. What do I mean by that? Short-term momentum continues for a while. Ride the wave. But when I'm sticking stocks in my invest portfolio, I'm not coming in and buying Deere at 120 bucks. I'm buying it when everybody hates it. And I've done really well. And that's the Warren Buffett approach. He will buy stocks when everybody hates them, when there's value there. And that's how I've always approached investing. I've done fairly well over my 18-year investing career as well by buying stocks when they're out of favor, but not trading stocks long when they're out of favor. So it's a difference. If I'm in it for a day trade, I want the momentum on my side. I'm in it for a swing trade. I want the momentum on my side. When I'm in it for an investment, I don't mind if the momentum is against me, as long as I'm getting some value.
Yeah, and the cat got a little of a bounce on that too. See if I can give you some levels here in
Give
the
us one
cat.
quick number on cat.
One quick number on the cat. Pre-market high comes in the cat
Right
at.
around 102, isn't it?
Yeah, I see a print here at 101.98, and you know what? There's a little high. I'd keep an eye on 10. Really, not much in there. You had a high at 101.65, and then previous day's high. I see two highs at the 102.56, 102 area, 102.80 area. That corresponds with your pre-market high. Your pre-market high is 122, 102.48. So we'll see what happens in that upper 102 handle.
Also reporting earnings last night, Salesforce.com, CRM. I played this one off the earnings report. I got the big pop. I actually got short right near the highs. I wish I would have held on, but scalper blood in me. I covered for a quick buck, and I should have held on. Then it actually fell all the way back down to, and it was trading red, and then it's popped back and trading green. So a little bit of a yo-yo after hours chart for CRM. Joel, give us the numbers.
Where'd you get your short off at?
Don't even ask. 95, I think, like just under 91. You know how I always sit under my whole numbers. I've always traded the same way. When you've got the big whole numbers, it always seems like whole numbers come into play. Ace knows those psychological levels. If I'm selling a stock, I'm usually selling it in the 90s ahead of the whole number. If I'm buying a stock, I'm usually buying it in like the 05, 02, 01 ahead of the whole number again. So, it just seems to work better that way because sometimes stocks turn at those whole numbers. But I looked at the report, and give us the earnings reports.
28 versus 26. That's a 2 cent
Yeah, that
beat.
wasn't huge.
Yeah,
And keep going.
and then the revenue, 2.388 billion versus 2.35 billion. So I mean, it's a good report. Is it
That's
a great report?
And that was my analysis last night, and I was like, "Is this a good report?" but I don't think it's a great report. And did they give some guidance too? I think the guidance was just good as well, if I remember correctly.
All right,
Do you see guidance there?
let
We're
me go.
making Joel dig here.
I,
Spencer's usually doing this job, but Spencer's away, so we got Joel digging through these reports. So
A little. I mean, I don't know why the companies do this. Street estimate at 31. They're looking for adjusted Q2 EPS at 31 to 32, and
yeah, it's right there.
revenues. Yeah, revenues estimate 2.48 billion. Now 2.51, 2.52. So yeah, they gave it a little bit of a bump in the guidance as well.
It was okay. The report was okay, and then it popped $3, and I'm like, you know what? This stock has been running up. The stock is loved by the street. I didn't think the report was good enough, and that's why I shorted the stock. And I waited. I waited until it started coming back because you always say don't short when they're going up. Wait till they start going down, and it got up there up over 91, and then it came back down with a pretty good 91 offer, like an iceberg. It kept refreshing. I was like, this looks like an institution that knows what he's doing. So then I got ahead of that, and I was starting, selling the stock short. And obviously, then it pulled back in, and it bounced around the 89 handle a little bit, and then I got out in the 89 handle. But then it went through 88 and went down to 87. I was like, why didn't I hold it? I could have got the whole thing. But anyways, it's back up here in the 90 handle here again. I think there's a relevance up to that 91 level. The only thing difference is it's not yo-yoing around right now. It's not bouncing around as much with those oscillations. I like to play the oscillations, so that's why for the trade for me now it's done because it's not oscillating around. It's kind of just hanging out here at 90. So it does look like they're still going to buy it here off the report, but I'm not jumping in with two hands here saying, oh, this is great because I didn't think it was that great of a report.
My number for the day
Okay.
is 90.28. That was your all-time high that was made on Tuesday. All-time
that.
closing high was made the previous day at 89.80. So keep an eye on 90.28 and Salesforce.com.
Jumping over here to the Gap, GPS. They also reported earnings, and we've been talking to retailers, and this is an example of, well, you don't have to blow it away for the stock to potentially go higher because they have been beating all these stocks up. I mean, in the last 6 sessions, the Gap has went from $28, $27 down to 23, so they were hitting it ahead of the report. So I've already got the bias coming in. If the Gap numbers are even okay or they just don't miss, the stock probably bounces. So they don't have to be great. They don't even have to be good. They just can't be bad. And so what were the numbers?
The numbers for Gap, Dennis' favorite store. They beat by 7 cents here, 36 versus 29, and a little bit of a revenue beat here. 3.44 billion versus estimates at 3.39 billion dollars.
What matters more? Did they give same-store sales or guidance numbers?
Oh man, you are. Man,
I make you dig.
man,
Spencer's
man.
always ready, but this is a new job for Joel here, and I'm so bad. I don't even have the report in front of me, so I'm totally leaning on Joel here for this.
Okay, I'm going to my trusty Benzinga Pro here, and they reaffirmed 2017 guidance. Comps up 2%, Dennis.
That's okay. So it's all okay. So that's good enough. Stock up 4%. That being said, what's the word of the day we say for retailers every time they pop up? Joel, you can say it.
Yeah, overhead supply. And
Yep.
The positive thing that I can say about Gap is I think that they own Athleta. And I know Lisa really likes the Athleta line of stuff. So, but once again, look at that. Not quite the low of the move yesterday, down in the lower 23. Now you're popping up. You're right at your 3-day high at $25. I believe that was right on the nose. Your 3-day high at 25 even, 25.02 actually. Your pre-market high is 25 even. Keeping a real good eye on that one. And Spinner, you might have joined us a little late here. We did talk about Children's Place, how that just missed the all-time high and then gave everything back. I mean, 110. I mean, you can lean on this level all day long. You had a low at 110.10 and 110.35. Got a little bounce off that. So good to go north above 110. Where this can stop between 110 and 25 is anyone's guess. And then Jack in the Box, you mentioned. They gave back some gains, too. I know they had a wild report. Yeah. I don't know. Maybe look for the gap fill down to 102 before you get interested in that one.
Ross Stores reported ROST and also Campbell's Soup. Where do you want to go? We got 4 minutes here before our first guest.
Let's see here. Let's go Campbell's Soup because I think I got that in my doc.
CPB trading down $2 in the pre-market. Disappointing numbers here for the soup maker. Again, these are defensive stocks. Do I think they're going to come down and hit Campbell Soup down $4 or $5 today? No, I do not. So I'm looking at this as a potential buying opportunity somewhere, but I'll wait till it stops going down.
All right, they missed by a nickel, 59 versus 64. Shy on the revenues as well, 1.853 billion versus 1.875 billion. Fiscal sales outlook from 0 to 1%, not great. They could see fiscal sales outlook actually decline. They pounded this thing down to 54 even, getting a little bit of a bounce here. Was leaning on the lows of the move, so I'll be keeping an eye here on that pre-market low of 54 even. Also see a couple lows in mid-November there at 54. So see if that holds. But coming back on the upside, we got a long ways to go to the top of the range or bottom of the range from yesterday in Campbell Soup.
Campbell Soup earnings not good,
Not at
and
all.
looking at a trade down $2 here. I had to take the punt because he didn't do it. 52.5. I'm looking at that from November the 4th. That's a long ways down from here. Did get to 54 though. I'd love it to get down to 52.5. You know what? These food stocks, remember how much these things at the beginning of 2016 when they were throwing out everything else, they were buying defensive. These things were all popping. And I mean, you can look, even at General Mills, GIS. Look at it in the summer when it had, rumors it was going to get taken over and GIS was going from 55 to $73 and everybody in the media was loving it. It's right back down here at 55. I'm looking at Campbell Soup. It's pulling back here now. 52.5 would be a nice level there. If you don't have food stocks in your portfolio and you want some diversification, I think there's some opportunity here. I mean, everybody hates these things now. From a trading standpoint, it's the wrong direction, but from an investing standpoint, I'm starting to lick my chops on some of these food stocks, Joel.
And also, what you have to keep in mind is Amazon is going to have to sell food, right, in order for them to make money. So people still have to produce it, right? So maybe look.
That's true.
Right?
Like Campbell Soup can just sell it on Amazon. We can do that.
Yeah. Kellogg's, a Battle Creek, Michigan company.
It's beat up too.
Yeah, that's beat up.
There's some value here.
Yep, look at that. Remember that run that it had? I mean, when it went,
They all
went up $6 that one day, didn't it? Did it go from 76?
Yeah, they all did. Back in July, in the summer of 2016, everybody thought food stocks were there. And we were even saying, you go rewind, you should go find the shows, because we were like, what is going on in these food stocks? This makes no sense at all. We kept banging our head against the wall on Tyson Foods, saying, how is Tyson Foods up here at $70? It makes no sense whatsoever. It kept going up, though. It kept going up for a couple of months. Eventually, though, longer term, we were right. And those would have been, good long-term shorts here. So just as much as everybody is hating the food stocks now because they're out of favor, and everybody in the media and everybody that comes on CNBC is a momentum investor and a momentum trader, as much as they all hate these things right now, I'll tell you right now, I'm thinking about buying some of these in my investment portfolio. I love it when everybody starts hating the stocks.
And you know what? And this is just totally Joel Elconin conjecture, but you know what I could see happening in one of these stocks that's really beaten up like this? Remember when Warren came in and took out Heinz? Remember that? And people were just like, what? And that thing, boom, I could, he's sitting on a ton of cash here, maybe looking for some acquisitions.
Well, I'll tell you something. And, this is just into my head. But when I heard the Colgate rumors, who do you think I thought about right off the hop?
Warren.
I thought about Warren. Yep. And I'm not saying that's just coming. There's no, that's just out of my head. But when I heard Colgate, I'm thinking, who can buy Colgate? Warren loves his consumer staples, and he loves those kind of companies. And if there was anybody, and I'm not saying that Colgate's saying they're not selling themselves, but if there was anybody that could buy a company like Colgate, it would be Warren Buffett. And, he likes to understand the companies, and he's bought Gillette in the past. He's bought a lot of things.
You're right.
I don't think that's happening. I'm not I don't want people going out there and buying it, saying, it's I'm not trying to start a rumor here. The rumor was already out there. I'm just trying to say, if there was potential for an acquire in Colgate, if that was the case, Warren could be that person.
Yeah, I mean, deep value here. These things have really
He
been
loves those.
depressed. Yep. I mean, or maybe just going private here. But Dennis, it's 8:35, and we got a guest to bring on. That's David Towle. He's the co-founder of Maglin Capital. He's going to talk a couple different stocks with us. So we'll let you go trade some Foot Locker, and we'll bring you back. We'll bring you back in a few minutes. We'll be right back with David. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick. Spencer's out, and we have Chris Deer Scalise helping us out here, working the boards. But David Towle's on the line. He's the co-founder of Maglin Capital. David, how you doing today?
All right, Joel, how you doing? Happy Friday.
Happy Friday. And, David's a good guy because was it just undergrad and law school, or was it just law school in Michigan?
Just law school at the Big Blue.
Big Blue. Okay. Well, little ways away from football season, but we'll surely get you on then. You got a couple different stocks that you're looking at, and you like to have different time frames. So let's start with the short time frame and then work our way out to a longer time frame. And one stock you like here, FRP, Fairpoint Communications. Tell us what you're looking at this, what's your target, and you don't have to share your entry price with us, but tell us what you're looking at in FRP.
Okay, sure. So I won't share our average price, but I will tell you that we've been involved in the name for about 5 years now. So it's something that we know quite well. We've been with the company for a long time. The company recently announced a purchase of the company by a larger telecom company by the name of Consolidated Communications. This is in the wireline space. These are all regional players. And the wireline space has seen a lot of decimation over the past month, I would say. If you look at Windstream and Frontier, they've gotten blown away. Those companies have some serious leverage issues along with operational integration issues. Consolidated is buying Fairpoint. Consolidated is an incredibly well-operated company with a very low leverage ratio relative to peers. Currently, the price, with the dividend indicates an 8% dividend yield, which is a very nice coupon to go ahead and clip. And the company expects to close the transaction of the purchase of Fairpoint. Consolidated will buy Fairpoint over the next, I'd say, probably 2 to 3 months. We should see a closing of the transaction. Consolidated has done a fair amount of acquisition over the past number of years, and they've done well in their integration of those businesses. So I think what we'll be left with here is one of the best-in-class operations. Still a low leverage relative to peers, very nice dividend yield in a business that, yes, is in a secular decline on the one hand, but there is a fair amount of synergies that Consolidated will go ahead and grab while integrating Fairpoint, along with they'll be able to go ahead and probably grow Fairpoint's top line because Fairpoint had lost a number of subscribers through a bankruptcy that they went through about 6-7 years ago, and Consolidated can go ahead and help gain those subscribers back. So the short of it is as follows. The stock's at 14. The deal was announced a couple of months ago at Fairpoint's stock price at around $19-20. The target on this is a $21 a share price. That's a 50% upside from where we are now, and I think it gets done over the next couple of months. Very low downside risk here. This is not a volatile industry. and it is not something where we expect that either company will come up with any surprises over the next couple of quarters to the downside.
You're not worried about that 8% dividend, right? They got good cash flow to support that. I mean, a lot of times when you see stock with that high of a dividend, boom, the dividend gets cut. They crush it. You think that dividend's safe for now?
Very much so.
All right. Also, I just want to ask you, when you take a longer term position like this, 4 or 5 years, do you trade around it at all? Like, oh, it's getting a little overdone here. I think this must have had a reverse split or something, right? Because I see it goes from 3 cents to 25.5. Do you trade around your positions, or are you just holding out for that $21 price target?
We sometimes trade around. What we'll do is, for the most part, add as things go down and make the position larger.
Okay.
We usually wait for, a pretty large event and catalyst to go ahead and exit the position. But to be totally honest, we did take off some exposure here when the deal was announced a couple of months ago that Consolidated was buying Fairpoint. That was an event we were waiting for. We've now added to the position at these levels because, frankly, the results over the past couple of quarters have been nothing but solid, and the market has traded off a fair amount on this name.
All right, going to a medium-term investment here. Global Star, you got a target on this of $10 now. This really got the hops from the Straight Path deal. I mean, you must have been just Google-eyed when you saw what they did with that Straight Path here. Talk about GSAT.
Sure. I'm going to try to keep it simple in terms of the details of the spectrum. So the bottom line is that Straight Path is an owner of some spectrum that can go ahead and communicate various types of media, and Global Star also owns spectrum. There are different types of spectrum, different bands, different power ranges, and so on. But nevertheless, what we're seeing is that the major players that use spectrum, whether they be telecom providers, cable companies, or tech companies, are looking at a dearth of spectrum. Based on what happened in Straight Path, frankly, it's a seller's market for owners of spectrum. That's what it comes down to. The Straight Path stock price was at 35. Today it trades at around 180. So that's a 500% return. The initial bid, there was a bidding war only between two parties, potentially three, but let's say two. Initial bid at $90 a share, made its way all the way up to, we're at 180 now. So with respect to Global Star, the last piece of information that has come out publicly was that the company has hired bankers to go through a process to potentially sell the company or enter into some monetizing deals for the company. The difference between Straight Path and Global Star, to Global Star's benefit, is Global Star has an actual operating business. They're the preeminent satellite communications provider. The second is they're owners of assets. They actually have assets other than the spectrum. They've completed an FCC process, and they're now moving to worldwide approval for their spectrum. And their license band is broad and is worldwide. The rumor is that the banker that's been hired has been Allen & Co. That's very exciting because in contrast to AT&T and Verizon, who bid for Straight Path, Allen & Co. has very deep ties into the tech community. They actually represented Facebook in their purchase of WhatsApp. I just want to go ahead, not to go ahead and give a plug to a competitor, but on Bloomberg TV yesterday at the SALT conference in Las Vegas, Chris Puccillo of Solus Capital Management, a multi-billion-dollar hedge fund, went ahead and spoke about Global Star as well and highlighted the fact that Amazon, Facebook, Google, Microsoft, so on, can all be potential acquirers of Global Star. If we do get into a bidding war, again, Straight Path only had two bidders. Stock went from 35 to 178. If we get into a bidding war with multiple bidders, we could see a much greater return here in Global Star. It's a very exciting piece of spectrum. Again, not to leave anything undisclosed. There are different spectrum types between Straight Path and Global Star. And the honest truth is, as Craig Moffett recently said, the value of spectrum is what a buyer is willing to pay. We strongly believe that there are a lot of potential uses and a lot of potential buyers for the spectrum out there. And just to add something vis-a-vis the trading community that listens to this show, there's roughly 100 million shares short on this name currently. That's like on a $475 million float, 475 million share float. And the shares trade between, I'd say 3-4 million shares a day, up to in recent days, when there's real activity, up in the 30s of millions of shares. So, there's a fair amount of trading going on here on a daily basis. It is volatile, but we are generally investors. We've been invested in this name for a number of years, and we think that there is, over the next couple of months, an enormous amount of upside coming from this process that the company is running.
All right, now one long-term investment here, Madalina Energy, MDLNF here. Boy, this is a low-price one here, and a lot of times when stocks go under $1, they never come back. This one just hanging out at the 12-13 cent level. I'll let you give your thesis on that, and then I also just want to ask you, kind of similar part of the word, did any of the Brazilian fallout you think is going to have any effect on this stock from the Brazilian stock market?
Oh, yeah, it's a pretty good question. Argentina generally, I'll get to the company in a second, but to your point about what's going on in Brazil, clearly South America, between Venezuela and Brazil, is in some pretty tumultuous times. Argentina, on the other hand, seems to be, right now, funny enough, the bellwether of South America. They are in a very good place. They've got a very good president, very capital markets minded, very open market minded, has imposed some really good policies, very democratic and capitalist. And, the economy is on the upswing there. It still has a ways to go, but the, business community, the financial community has never seen in the past 15 years, as much activity as they're seeing now. There's a fair amount going on in the local currency in the markets there. Stock market is up about 30% year to date, and there's still a lot to go. And so Madalina Energy, so now on a relative basis in South America, Argentina is phenomenal in comparison to Brazil and Venezuela. And in connection with Madalina Energy, which is an oil and gas E&P company, this is 1,000% return in our eyes. The stock is up 35% year to date, 12%, roughly month to date. We've got a price target of $1 plus on this. This is a true turnaround story in the operational sense. The company, over the past couple of years, has exited Canada. They used to have assets up there. They're entirely and exclusively focused down in Argentina. We have executed a number of joint ventures over the past couple of months that have brought in some pretty serious partners to help develop the company's shale assets. And last week, the company announced an injection of $23 million into the company for working capital and CapEx by a very, very sophisticated and experienced Ecuadorian family that is a third-generation oil and gas experienced family. They bring a tremendous amount of focus and investment to the company. I think what we'll see in the very near term is a fair amount of cost cutting. They will achieve profitability very, very shortly, I have no doubt. And then the next thing on the agenda will be to access local capital markets and increase the shareholder base. Right now, between a listing in Canada and a listing in the United States, frankly, the organic investor for this investment is being left out entirely. The organic investor is Argentinian investors, both, individuals and institutions. And once the company goes ahead and accesses local capital markets, both from an equity perspective and from a debt perspective, I don't think they'll look to raise equity capital and be dilutive to the shareholder base. That's surely not what they're planning. But what they will do is make the stock a listing on the Merval down in Argentina, allow local investors to invest, and then go ahead and access the debt markets probably in order to go ahead and grow the production base of this company. And it is a really solid turnaround story, very low downside risk in terms of execution, frankly. And it's not binary, in any way. It's not based on a transaction or anything. This is a company that is going to grow substantially in terms of production and in terms of profitability over the next quarters and years.
We've been on the
So
line
we're
with
really excited about this.
We've been on the line with David Tal. He's the co-founder at Maglan Capital, talking short-term, medium-term, and long-term investments here on Benzinga's Pre-Market Prep. David, thanks a lot. We'll speak to you again soon.
Thanks, Joel. Have a great weekend.
All right, Dennis, we'll bring you back in there. Spoo's not moving too much. Still up 6.25 here, hanging out near the highs of the session. Yesterday's high, I mentioned, 23.75. Now, the 50% retracement from 24.40 down, from 24.040 down to 23.4450. That was a 60-point move. 30 retracement 74.50. Yesterday's high 75. Dennis, let's talk about Brazil a little bit yesterday, and it got hit. It did end up coming back a little bit. Did you take a look at any of these Brazilian stocks yesterday?
It's a back a bit. I mean, it's a little bit of a dead cat bounce, though, in my opinion. I don't know if I see these things. Like I said, I don't see it coming back here, anytime soon. When you have something getting killed 20, 30%, in a country, and you've got some corruption, obviously, looks like going on over there, investors are spooked. So, yeah, you get a bounce, you get a little bit of short covering. We're up 4.7% on the EWZ. But, we were down, 20% yesterday? So a little bit of a bounce here. Nothing to get too excited about here. So I think nothing more than a bounce, and I wouldn't be surprised if we do retest those lows eventually.
Yeah, someone, Johann Smith made a good point, and that country's still reeling from the Olympic debacle. They put a lot of money into that, and I'm not sure what they got out of it. All right, did we get all the earnings in there in the first?
Well, let's talk. Okay, so let's talk. It says option expiration day. We haven't even mentioned that yet. And obviously, option expiration day is full of volatility, especially at the open. Considering the big move that we had on Wednesday, I would not be surprised to see a few fireworks here on the open. Maybe some institutions jockeying their positions here. This is, obviously when the options expire, so they have to sell the stock against their options or buy the stock against their options here. And you see a lot of movement on the open and on the close as well on these days. So just looking at the opening imbalances here, I will say you got to take this information with a grain of salt, because this information, there's so many institutions that are trading at the open on option expiration Friday that these numbers will fluctuate very quickly. As of right now, I've got sell imbalances across the board. I'm looking at Pepsi with 232,000 to sell, Coke 673,000 to sell, Procter Gamble 397,000 to sell, Wells Fargo 721,000. So these are enormous sell imbalances. GE as well, 1.3 million to sell in GE. Again, these numbers don't mean much because it's too early here yet. On a normal day, at 8:53, and I saw these numbers, I'd say, oh, this S&P is in trouble. This is not a normal day. There's going to be a lot of buyers that come in here eventually here yet too, especially with the S&P futures up. They could offset these imbalances. They could pair off at, even higher prices there. So you got to look at this information and say, okay, if we open right now, we would open down. But I would imagine there's going to be a lot of buyers that step in the next 37 minutes. It's more you look at that information at 9:29. So, I'll try to tweet them out again at 9:20. It's about as close as I can get, because obviously I have to trade the open myself and I don't have time to tweet, right before the open. But that being said, as of right now, there's some significant sell balances.
All right. Little ratings. Let's take a look at some ratings here. And was it Monday that we were talking? These cybersecurity stocks got a big pop here off the ransomware, the WannaCry virus, and man, what a great selling opportunity here is. You're getting an upgrade though today, Palo Alto Networks, from Jeffrey, so it's getting a little pop. But look at that trading action on. It was on Monday. You popped up over 120, you giving it all back.
That was a fade. We talked about that when you get these, hacker attacks, all these hacker stocks, all these cybersecurity stocks get to pop up. And it was a fade. And, that day I actually got short CYBR right on the opening print. And it came in with me immediately. I took no heat on that trade, and it came right back down in, and I had a pretty good trade there on it. And CYBR is actually right near the lows now, too. FireEye was the only one that we said we kind of, liked. because it was in breakout mode. And I will say on FireEye, it is holding. It's trying to hold the level from which it broke out from, and actually putting in a little double bottom the last couple of days, 1489, 1490. So I still like this 15 level here in FireEye. I think there's an opportunity there. I think if it takes out the double bottom low of 1489, I want no part of it. But there's a swing trade with obviously a defined risk here. 1489, it starts trading 1480. I'm out. If it's but it's looking at it from a bounce level here.
Yeah, FireEye did get a pop over 16 2 days in a row, and now 15, trying to hold that gap from earnings. I do see the double bottom there. Let's see what else. Now, BMO coming out here on Walmart to upgrading the market perform here, Dennis. I mean, is this a little late
to the party?
Yeah,
Yeah,
I mean, come on.
late to the party. I mean, this is a total chasing call. So stock has been up in the last 4 months from $65 up to 78. Now you're upgrading the stock here. What is it? What are they upgrading it to?
From underperformed to market perform.
Okay, so they're just they know they were wrong basically when they had an underperformed. Stocks went straight up, and now they're just going to market perform because they've been wrong. I mean, I feel like they're late to the party here. So this is just analyst chasing price at its best here right now. And BMO makes some good calls on stocks too. This is obviously wasn't one of their better calls to be underperform on Walmart when the stock's been straight up.
Yeah, one retailer that's hung in there. Now, I did look at this one yesterday, and we traded 78.15 here. So there could, man, that's up another 57 cents after the big run yesterday. Going back to May, Dennis, and I think I saw a high in the 78 handle, upper 78 handle, back in May before this thing really cratered. So keep an eye on your pre-market high, 78.15, and then you have to pull up a monthly. I think it was like May 15th or May 18th in 2015 when it got up. I think it was 78.56. But check that. Trying to open over $78 after that big run yesterday. There's probably some offers at the point. I don't know if they'll be low enough to scoop it up off the open, but 78.15 is your current price.
And Kramer was giving it some love yesterday as well. And, I love Jim Kramer. He's witty as hell. I think, he's what CNBC really has going for them. And he does do great analysis. But, Kramer's more of a momentum investor, it seems like, as well. When the stocks are going up, he gets more bullish. When the stocks are going down, he gets more bearish. I mean, everybody has done that. Everybody does that in the media because they don't want to be wrong immediately. And it's always hard. But, Walmart is a classic example of what I've been talking about is how I like to be a contrarian investor, because everybody hated Walmart when it was going down through 70 and going down through 60 and getting down to the 56.30 low that it had at the end of 2015. Go listen to the shows. I love the stock under 70. I never bought it. I don't know why I didn't get it. I was hoping it would come. I was too cheap. I was hoping it would come all the way down to $50. But you can remember, Joel, on the shows that I was saying as an investor right now in Walmart at $60, I was saying I don't think it can go wrong. Here it is at $78. I'm kicking myself. I didn't follow my own advice because obviously stock has come a long ways back. So contrarian investing works. Now, if you're coming in here now and buying Walmart, you're late to the party. Stock's already ran up from $56 up to $78. You're coming in buying it now? I don't know. Like from a momentum standpoint, from a trading standpoint, completely different animal. But we have a lot of long-term investors that listen to the show, and I will tell you again, this is the third time I've said it on the show here. I like to buy the stocks in my invest portfolio when everybody else hates them, and I sell them when everybody loves them. And it's usually a little bit of pain for a little while because the ball doesn't turn immediately. But when it does turn, if you're buying good companies, with good dividends at reasonable prices, that's the Warren Buffett way. And Warren Buffett is, obviously the smartest investor, in the last 50 years here. And he's done it that same way, as basically buying, when everybody hates the stock.
All right, 8:59 here. We before we wrap up the show, just the Preakness is on Saturday, and you're probably not going to get as good a price here. Always Dreaming. I'm just gonna lay off the heavy wagers. Maybe put Always Dreaming in there. With,
so who won? Who won the
Always
last
Dreaming. Race? Always Dreaming.
Okay.
He was the favorite, though. I picked him before he was the favorite. I mean, maybe you'll get lucky if looking at Lee comes in second. You might get a decent price on a Perfecta. But to me, it looks like a two-horse race between Classic Empire and Always Dreamin'. I'll be cheering for Always Dreamin' because I would like to see another Triple Crown so I can get another Triple Crown T-shirt for Father's Day. But
Nice.
let's look forward to next week here, and we got some good guests coming on the show. We have Sasha Edakov, trading educator and mentor of Rise to Learn and Traders Fly. We have the chief strategist from TD Ameritrade, JJ Kinahan, coming on.
Oh yeah, nice.
Phil Davis of Phil's Stock World. He'll be
Phil's
on.
World.
Yeah, and you know what? I got a really good guest. I think he's coming in on Thursday. Jerry Parker, Dennis, of Chesapeake Capital. He's a former Turtle. From Richard Dennis. He was in that original program. This guy has incredible returns in the futures market. And Dennis, I need to talk to you about it. He likes to trade the single stock futures. He likes to leverage. And he says,
really? We got a single stock futures trader.
Yeah.
I've never met one of those before.
Yeah, Jerry Parker at Chesapeake Capital. Just a quick reminder to check out Benzinga Pro. That's our real-time news service. Also, if you missed any part of today's show, you can listen to the whole thing again on our podcast. Find us on iTunes, SoundCloud, and Stitcher by searching Pre-Market. Please remember that all the information, material, and content from our show is for informational purposes and not to be investing advice. That's our show for the day, folks. Thanks for listening. We'll be back with you on Monday morning.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.